Let's look at the money market fixed income space in Nigeria. Just yesterday, we had a Treasury Bill auction. Total amount offered about 14.5 billion naira. Huge oversubscription to the tune of about 280 billion. Only 30.5 billion of that allotted. Stop rates at the bottom of your screen: 2.5% for the 91-day, 3.5 for the 182, and 9.4 for the 364 days. So joining us to discuss further not only this bond auction for next week, we have Oladipo Ajayi, who is the head of fixed income trading at Chapel Hill Denham, and also we should have Akinyemi Oluwasegun, who is a fixed income trader with Afrinvest Securities. Gentlemen, thank you so much for joining us. Since the Twitter ban, I finance Twitter is why I follow rates and so on. Okay. For our viewers, where can we follow NTB auctions? Is it CBN website or DMO?
No, you can always get the result on CBN website.
Aha.
Even you can also get the result for the OMO auctions, and also you can get as much as a year stop rate on the CBN website.
Fine.
All you need to to go on CBN website, you go to the data side, and you'll be able to actually get it.
Fantastic.
You see debt securities. From there, you can also always get those.
So finance Twitter shouldn't be worried. Just go to the website and you get the information.
Of course.
Shego, let me come to you. How do we interpret the huge oversubscription, I guess, for the 91-day and 364-day bills?
Okay, yeah. So thanks for having me, buddy. So looking at yesterday's auction, we realized that there was strong investors' appetite was very strong. And why we could actually see investors' appetite was strong was because looking at the system liquidity yesterday, which was around 90 billion, then the DMO actually offered 15 billion, while the subscription was around 218 billion. So merely looking at this figure, you realize that the market is short-term bullish on NTBs. So that is what we would actually attribute the oversubscription to.
Fantastic. Thank you, Shego. Dipo, let me come back to you. 14.5 billion, I think we'll have the summary up. We can put up the summary there. 14.5 billion offered, 30.5 billion total allotment. Is there usually room to allot more than what is offered based on the subscription level? Because we still look at the total subscription, 280 billion. What's your take on that?
So if you have seen the precedents from the beginning of the year, you would have seen that has been the norm on the part of the DMO on the Treasury Bill side. They've been allotting more than what's actually offered in the market. And that to some extent tells you the appetite of investors around the Treasury Bill side. Because when you expect yield to go up, what you do most time is you actually play in the short end of the market, so that by the time the instrument is maturing, you are rolling over to a higher yield. And that's one of the reasons why we've been seeing more of that great participation in the Treasury Bill space.
Fantastic. Shego, is the reverse also the case if appetite is weak and the offer is undersubscribed? Can the allotment fall under the total amount offered?
Yeah, definitely it can. You know, if for instance you wish to access a facility, say a loan in a bank, and you actually have the intention of borrowing like 10 million, whereas and with an interest rate of 10%. So on getting to the bank, if they are willing to offer you at 5%, you could actually decide to borrow more. But if they are offering you around 15%, you could decide to actually reduce the amount you are borrowing. So definitely reverse will also be the case if demand is weak, or if market is demanding higher than the DMO wish to accommodate in terms of rates.
Great stuff. Oladipo, let me come back to you. The stop rates, if we look at the first graphic, as far as the auction is concerned, what's been your take on the range of stop rates that we've seen in the auctions, past and present? Okay,
if you need to actually check the stop rate from the beginning of the year, you'll see how we have migrated from a 1% levels to as high as 9.8 levels. And but one of the things that I mentioned in one of my interviews heard was that it was very difficult for us to cross that same double digits. And one of the reasons is because that is where the OMO rate is currently stopping. And most times the antecedent is that the OMO rate always closed higher than the NTB rate. And that's one of the reasons we've not seen the NTB actually cross that line. But however, since we saw like a change in the trajectory of the economy, because if you look at it now, inflation has dropped twice in this year. We saw what we saw in April, Again, we saw another 70 basis point drop again in this month. So what it tells you is that, and if you look at that in tandem with the statement of the CBN governor after the MPC meeting in March, when he said that inflation will start dropping by May, you understand? It's showing that it sounds good. So that has changed the trajectory of the market, that it seems inflation is now abating seriously, and as a result of that, a lot of people are trying to actually capitalize on that. But the result we saw yesterday, we cannot totally assume that that is the level, because the volume that was actually sold was actually very low compared to what we are seeing. The totality of what was sold, it was about 24 billion on the long end, and normally we would normally see 168 billion, close to 200 billion being sold. So because of the volume, you can't use that to actually determine that, oh, maybe we are now on a total downward trend. What will actually give us a clearer view of where we are going is the next NTB auction, because of the volume that will be on that on the calendar for that day.
Thank you for that, Oladipo. Segun, how would you describe, what's your take on the yield trajectory for T-bill rates?
Yeah, by the time you actually look at the market and according to what he said, normally you can't really determine as in what is happening with the market just using yesterday's auction. But actually looking at market expectation and market sentiment as seen in recent trading sessions, you realize that market has been trading bullish for a while, and that is due to the fact that market is expecting some numbers of liquidity in July, which is around 1.17 trillion. So with that, on the short term, we actually expect rates to remain compressed in that space. But after July, there could actually be a reversal. But till the time we have this liquidity, which is 1.17 trillion, actually there's a bond maturing, which is July 2021, maturing in July. That one's about 550 billion and also coupon. So this would definitely impact what would happen in the market. So for now, short term, we are bullish.
All right, thank you for that. Oladipo Ajayi, let me come back to you. At the next fight, we should put up a circular from the Debt Management Office, which is looking at the next bond auction. Okay, cool. There it is. What can we expect this next bond auction from the DMO?
Yeah, Segun just mentioned something about the level of liquidity that will mature into the system next month. So a lot of investors are trying to front run the liquidity maturity in the system. Like you said, we have close to about 1.something trillion maturing. On the bond space alone, we're having close to about 800-something billion in form of bond maturity and coupon payment for the month of July. So it tells you the level of activity that will likely happen in that space. So this forthcoming bond auction is going to be highly oversubscribed, because a lot of people will actually want to participate in this bond auction, and in anticipation of that liquidity that will mature into the system next month. Because what will that mean? We expect yield to actually drop maybe by 20-30 basis points in the month of July as a result of the maturity. So it makes sense for you to want to actually buy now. And if you're a short-term trader, you want to buy now and maybe exit the position by the time those liquidity hit the system. So for this auction, we expect the auction to be highly oversubscribed.
Great stuff. Segun, so I guess in general, when we look at money markets and fixed income rates, what's the general takeaway?
Yeah, so the general takeaway on the money markets and fixed income is still that investors will continue to trade cautiously in those space. And why they trade cautiously? Because when you look at everything that we're expecting, as Oladipo mentioned, in terms of liquidity, and also when you look at the way CBN has been trying to manage rates in terms of system liquidity. So definitely you'd actually expect money market instruments to trade range bound. So, but on the fixed income space, we're actually expecting investors to trade cautiously. And at the same time, we also expect rates to remain compressed.
Thank you so much. You agree? Yeah. Generally, we expect rates to actually compress by July. And the only indicator that can actually push yield up as we speak currently would have been the inflation figure. And I think what happened in this May inflation figure is basically the strong base year effect. So it seems we are already moving to that terrain of strong base year effect that will actually impact the current inflation figure positively. So, and by the time you're getting to like the end of Q3 towards into Q4, you're already getting into harvest season. hopefully the harvest system will also affect the inflation figure positively and also drop the food inflation rate. So if those things pan out well, we might not see that aggressive, bullish upside movement in yield as we have anticipated.
Okay, fantastic. I need to ask you both also about the FX picture. Segun, let me come to you. There was news yesterday that the central bank was looking to assist the Central Bank of Gambia in printing its currency. Today, we just talked in our last segment about the CBN boosting FX for travelers. What's your take on, I guess, on the what's happening in the FX space?
Okay, yeah, so my take actually is that we expect current trend to persist. So the reason for this is because, making policies to artificially hedge up the value of the Naira has always been an issue, and it will keep being the issue. So, this is because an artificially strong Naira would definitely lead to speculation. After speculation, people would definitely tend to hoard FX in terms of dollars, and this would increase demand for the dollars which cannot be met. So when you look at all of this, you would definitely expect that people would keep hoarding the dollar, and demand would keep increasing. So what we are seeing now, we don't expect it to end at the moment. We're actually expecting it to continue.
Thank you for that, Segun. Oladipo, what's your take on what's happening in the FX space?
Yeah, I think I agree with you to a great extent because if you look at what the CBN has been doing, just what you mentioned, they are trying to actually boost FX provisions to travelers, and I felt they aren't doing it through the right channels because when you send money to BDC every week, I think it's more like a promo to them because people are not feeling the impact of that funds. You sell money to BDC, are they actually doing the right thing with the money? So I feel that why not sell to banks? Banks that you can monitor, banks that you can suspend. You understand? And with that, you can create liquidity in the bank. And even between banks and BDC, who has the greatest network to actually reach the people? You understand? So it is easier for me. I feel that the CBN should have focused mainly on banks, or such funds should have even been used in the high-in window to create liquidity in the high-in window rather than funding people's traveling or other expenses. So I feel a lot of this policy, they need to actually tweak those policies. And also, I think, again, the CBN also needs to actually liberate the FX market. Of course, they did something. They've been trying to actually compress the number of rates that we have. But I think that they need to work around it and just make it one rate and create liquidity in that market and allow market to trade. At the initial stage, you might see that volatility take Naira to a region that you don't expect. You understand? But with time, people will see value in that currency and people will actually come into the market to bring funds to the market.
Fantastic stuff. Oladipo Ajayi, head of fixed income at Chapel Hill, Denham, and also Akinyemi Oluwasegun, fixed income trader at Afrinvest Securities Limited. Thank you both for taking us through money markets, fixed income, FX, and all the likes in Africa's largest economy. I appreciate your insights. Thank you so much.